With crude oil reaching $95 a barrel, many people are claiming that the party is over and then oil is gonna go back down. Now, personally, I have a different opinion, and I had this opinion since March of 2020, and I've been saying that oil can easily pass the level that it actually reached in 2008, which was around $140 a barrel. We could get back to 140, maybe even close 150, maybe even $200 a barrel in the future. I know this is very bullish, but I think 120 to 150 is in the bag for me. And that means that many of those oil stocks that continue to perform well, they are continue to kind of perform even better and better and better. Now, I don't know about you, but I personally like to buy things close to their 52-week low, or things that haven't really starting to move yet, things that are under the radar, not just, British Petroleum or Royal Dutch Shell, which I owned before, and those stocks are fine. But in my opinion, there's only two more ways to actually play oil with stocks that haven't really gone up yet. One of those stocks, which is very high risk but very high reward, I talked about it, RIG, Transocean stock. The stock is sitting at $3.50. The stock used to trade at $150 a share. Now it's never gonna go back to $150 a share. But whenever they started investing back into production, whenever they can get higher rates, especially if oil gets to 150, they must have to get higher rates, as we have lower and lower production. And if countries and other places, they want to seize inflation, we need more energy, we need more production and stuff. And now this is sitting at $3.50. In my opinion, if everything goes fine as expected, this stock is at least $5.50, $7, maybe even $10 on the high side. But I found a safer way to actually play oil with the stocks that haven't gone up yet. It just barely started moving today, 11%. But if you look for the past year, I mean, the stock is down pretty much a lot. And this stock is TPL, Texas Pacific Land. I mentioned it in one of my videos before. This stock now is trading around $1,100 a share. I personally think it could at least get to $2,000 a share by the end of the year. And TPL is one of the largest landowners in the state of Texas, and they make money in three main ways. Their biggest one, which we're going to focus on the most, is the royalties business. And royalties really is the highest margin business you could really find. It's pretty simple. They own the land, and other companies, like Royal Dutch Shell and ExxonMobil, they pay them kind of leases and royalties to use the land kind of to do oil production and other kind of things. And this is very high margin business, and it's proven in their margins. Look at their gross margin. It used to be around 100%, 101% gross margin. Now it's 97%, which is amazing. Free cash flow margin of 47%. I mean, you just don't find really this kind of margins anyway. Even with tech companies, you don't find this kind of margins. And the beauty about their business, not only they have fixed fees, but whenever the price of oil goes up or whenever production increases, the revenue is gonna go up. And if we look at the performance of TPL over the past 10 years, it returned around 43% compound annual growth rate, which is double the Nasdaq, more than double the S&P, and more than oil itself, because of their royalty type of business, their high margin stuff. Now, me personally, I don't hold these type of stocks really on the long term, but for something like TPL, it could be a long-term investment, but I generally don't like to hold commodities as a long-term investment. I like other type of compounding machines, actually, that doesn't really get affected much by commodity prices. And I have an amazing balance sheet with no debt. The real cash balance now is around 650 million, so pretty amazing balance sheet. They do pay a dividend. It's like a 1% dividend, is not much, but they used to do massive share buybacks, and before they stopped since 2020, and now they are expected to resume share buybacks in 2022. But whenever you're buying TPL, you're betting on two main things. The first bet is oil to keep going up, which is going to increase their royalties revenue, and they will increase the royalties revenue. But the second one, which is very important, is production itself coming back to the state of Texas and to the United States. We have a lot of potential here in the United States, but now politicians are not accepting those permits because of green energy. But I think now what we're learning with oil, with everything that's going on, that first we have to be energy independent in order to have full freedom, full mobility in the country. And the second one is, yes, climate change is important. It's very very important to have clean energy, but it's not something we can do right now. It's something that's going to take time and very, very strict planning and a lot of investments. It's not something we could do right now, and we're already seeing people paying this kind of cost right now. I'm already seeing people on the, they drive their cars, they are actually turning their car off on a red light because they can't afford gas. And what if oil goes to $150 to $200 a barrel? What's going to happen then? So I personally believe that production is going to make a comeback here in the United States. If it's not maybe this year, maybe whenever we get some changes in the government and stuff. But I do see production coming back in a massive, massive way. But if that doesn't come back and only oil goes up and the current royalties goes up, this is really all you need for TPL to reach $2,000 a share by the end of the year. And what's keeping investors away from the stock is actually the valuations. They look at the market cap to free cash flow. It's sharing 30 times and a half free cash flow, which is not cheap at all. But really, in the history of the company, it traded at a mean of 66 and as high as 126, and oil wasn't even close to what it was right now. But this is not really the way you should think about this stock. Why? Because it's very high margin business. This is why it's expensive. I mean, just look, for example, at the revenues and expenses, okay? Now, this is in 2020, this is in 2021, full year end. They made around $150 million more in revenue, and they only increased their expenses by 3 million. 3 million in expenses to 150 million. They have almost no expenses. They have some salaries, yes. They have some water kind of services because they have a water business, some SG&A, no kind of marketing, nothing. They're trying to invent a new product or whatever, none of that stuff. And they made around 269 million in net income. I mean, you just don't find this kind of business model anywhere else. It's pretty safe. And this is why I personally decided to open a position in the stock around the $1,000 range. Anything under 1100 for me is a buy. Why? Because I have a lot of cash on the side, and I look at something as TPL, and I look at what's happening with oil, with everything, with inflation, and I ask myself, what is more realistically to happen? Is to TPL to go under like $900 a share, or to go back to $1,700 and maybe even make a new all-time high of $2,000 a share? For me, around $1,700 to $2,000 is more realistic, so I decided to open a position even though the valuation is not really the best in the world. And basically, if TPL goes back to the mean of 66, this is around $2,000 a share plus on the stock. But if we have production coming back here in Texas or in United States, or we even have oil going up, which is going to increase their royalties, it's going to make this business more and more appealing, especially as stocks, like other oil producers, Chevron and others, they keep, making new all-time highs and stuff. Investors, big funds are going to start looking at alternatives, and TPL, this is kind of the under the radar stock. It's an alternative to the other type of stocks, you could say. And RIG is also the same, but TPL is much safer than RIG, but RIG is much higher reward than TPL. So you could pick and choose. Maybe you own another oil producer, that's okay. This was my opinion on TPL and RIG, the way to play oil. I think this is the last two stocks you could actually buy before they make a massive move up or they go to zero. I can't predict the market, but this is my opinion on them. If you enjoyed it, please press like and maybe consider subscribing. I hope to see you in another one.